All right, we're live. Welcome, everybody. Thank you for joining us today. This is the Q1 panel. So we've been doing these every quarter and kind of attacking different parts or approaching different parts of the real estate world so we can keep growing as an industry, because we're all, whether we're in the appraisal world, real estate world, or the lending world, we're all in the same really greater world. So these have been great for us to pick the brains of some of the most knowledgeable people in their industries. And so we appreciate you guys joining us today for the Q1 Hub panel.
Yeah, thanks for having us.
Yeah,
awesome.
Thank you.
So let's start with Andy. Andy, if you don't mind introducing yourself, tell us a little bit more about you, what you do. And
My name's Andy. I'm an appraiser. I started about 2.5 years ago. I am just at the very end of my training process. So I turn in my application next week, and then they goes to the state and they look it over and they approve me to take my licensing tests. So that's where I am at with my career right now, is just kind of on the precipice of going out on my own. And then I work for Gustafson and Associates here in town, and that's pretty much it for right now.
Awesome. And we're going to go here counterclockwise because we're going against the grain. Dylan, if you don't mind introducing yourself as well.
Yeah, perfect. So I'm Dylan Langey, I'm the branch manager and also a loan officer at Umpqua Bank here in Bellingham. Started out in October 2015. So been doing it now for 5.5 years. Took over the manager role about 1.5 years ago. Loving it, just living it. I grew up here, went to high school here, college here. Just love doing the lending and the finance here, and just watching, Whatcom County grow. And excited to talk about appraisals.
It's grown a little bit in the last 5 years, right?
No doubt.
Yeah. And Olen, thank you for joining us. You're pre-vacation.
Yes, sir. Getting ready to get out of the super soaker of the Northwest here.
We're all ready to go. Yeah.
Some much needed vitamin D. So a little background on myself. I've been appraising since 2002 here in Bellingham with the Moya Group. I'm a designated member with the Institute. Besides being at the Moya Group, I went down to Dallas for 1 year to assist Fannie Mae with closing out their book of business from the financial crisis in 07, 08, 09. And so I got to really see and develop that collateral underwriter, beta tested that, and found out what that was all about. And so right now, just working on my commercial certification, getting a few more hours wrapped up there so that I could sit for the examination and get my general license.
Awesome. Well, thanks for joining us, especially pre-vacation. Really appreciate your time. So let's just jump right into it. We've got people watching here. So the group here is the Whatcom Real Estate Hub, Whatcom County Real Estate Hub group of realtors. And so really the purpose of this panel is to dive into a little bit more of the nitty-gritty of what you guys go through from your perspectives and your roles in the current market. And I'd like to also see some context, for those of you guys that have been doing this for a while as well. What is different about this market that was not happening before, and what are you analyzing, differently than you would have before? So I'm sure there's base criteria. Olen, if you want to dive into that, what's different about this market?
Primarily, what is different is the extreme scarcity of inventory. There is just an unprecedented, which is an overused word, but it's the truth. There's literally, last time I checked, there was 203 homes for sale in the entirety of Whatcom County. To put that in some context, usually, even at the peak of our, marketing season, which is normally during the summertime, the inventory might get down to 600. That's the peak of the buying activity. So we just have nothing to buy. And so that coupled with the coronavirus and this massive influx of people that can work anywhere and they're coming here with cash. So there's a lot of demand on the demand side of things, which we have never experienced to this degree. So I guess that's one point. The other point is the multiple offer situation. Residential property in town here might have 15, 25 offers. And so that's unique in itself. And so, the buyers that are coming, they're all scrambling for the same limited inventory. So it's putting extreme pressure on prices, and prices are moving up. Last year, Bellingham prices were up 17.5%, and I kind of forecast in our group here with Troy and myself, we're probably going to see another 17.5% this year.
Yep.
There's just nothing coming online that suggests otherwise.
Yep. And typically, real estate agents are pretty optimistic. I think everyone in this group can probably agree that we're an optimistic group of people. We're in sales. Our job is to, project confidence and have our clients be confident about our market valuations. And really, and Dylan says this a lot too, but he's there to have the non-sexy conversation about what reality is, and you guys are there to fact check that, right? And so, agents being optimistic, tell me about your role in an optimistic market to have to be kind of a realist or very realist, if not conservative, on your recommendations to clients. Dylan, do you want to jump into that? And Andy, you can follow up that.
Yeah, I mean, so kind of how the process typically works. And I mean, we're speaking live to a group of realtors, so they kind of understand this process is nobody really gets jacked up to come and see me, right? I mean, it's almost like pulling teeth and getting a hair follicle, right? I got to check credit, income, and assets. I basically have to look at their whole life story. People hand over a lot of personal information. So that's why, Leo and I always joke that, I don't really have the sexy part of the job. They typically see something online, come to a real estate agent, right? They see a home, they can see them growing a family, having their dog, the fenced in white picket fence and all that stuff. And then the realtor goes, oh, by the way, unless you have $500,000 cash, you need to go talk to a banker, right? And they go, oh, okay. Then they come and see me. So, what I try not to, as a lender, step over the line of also becoming a realtor, right? But I always tell clients there's price, features, and location, right? You can hopefully get 2 of 3. In the market we're in right now, a lot of times you get 1 of 3, right? If you want the best location, you're going to have to pay probably top dollar, and maybe the home doesn't have a brand new kitchen and bathroom and all that, right? So I kind of have that conversation with them, but really my conversation is more on the number side, right? I always ask them, hey, maybe you've gone out and seen some homes with Leo or the real estate agent. What price range are you looking in? Or, if you're looking online, what price range are you looking in? And then I have the real kind of, come to Jesus moment of like, okay, well, let's see your credit, let's see your income, and then let's see your assets. And I ultimately would tell them, okay, well, here's what you can afford on paper, right? Like, here's what Umpqua Bank or, another lender will lend you based on certain criteria. And then I say, but you also need to go back and do some personal budgeting as well. You may be approved for a $500,000 home, but maybe that payment's $2,600 a month. And they go, ooh, that's way too much. So then I say, okay, well, what do you want your payment to be under? And they say, okay, well, $2,200. And I say, okay, well, maybe that's more like $425,000 with X amount down, but it also depends on, if there's HOA dues, if they're, where the property is located for property taxes and all that. So that's really the if you will, the reality that comes with talking to a lender is like, you might see all these homes, or a lot of people might undershoot their budget. They're only looking at $350,000 homes, and they come to me and say, oh, wow, I can actually afford this. So, that's kind of the reality that we have when they come to me. Does that answer your question there?
Yeah, it does. And you know, it's interesting because, and Andy, I think you can probably talk to this, and Olen, you can as well. So the agent's optimistic is going to find something in a market where there isn't a whole lot for sale. There's very, very little for sale. They finally find something, and in order to get it, they have to go above and beyond, probably overextend if they want one of those three things, right? Because they can't, a lot of the times can't have all three of those. So from your perspective, you guys, you and Olen come in and say, all right, so they've been pre-approved through a lender. You found a home. Now it's my job to come in and validate that for the bank, right? Tell me about like being not necessarily directly tied to the success of the transaction, but more so coming in and just being completely based on data, you know, based on historical data and obviously a little forward shooting data. Andy, for you, what is that like as an appraiser coming in and saying, here's the reality, sorry?
It's not like here's the reality, sorry, but it's an interesting time because with the market how it is and how it's just continually going, we have to pretty much take that big wheel that's going and we got to stop it right at that point. So when we go see it that day, we got to go, okay, today, this day right here, this is what this is worth. And a lot of people continually start going, okay, it's still going, the market's still going, the market's still going, even through their whole process. And they get this idea of what their home is worth and it gets inflated, which is unfortunate, but it's a part of the machine itself. And when we do take that date and we go from there, the tough part now is that we don't have plenty of data to take care of it. You know, we don't, with how little sales there have been in the last year, it's hard to find when you sell that unique home that, you know, even though it had 15 offers on it, and you know that somebody's willing to pay, multiple people are willing to pay that amount, you have to back it up with data. And the data is sometimes scarce, and it causes us to either expand our scope of work, whether we're going and comparing other neighborhoods that are comparable, that are seeing the same type of growth or the same type of improvements on the property. And it kind of goes down this, it just extends the amount of work that we have to do to verify what we're putting out there. And sometimes we do have to have the hard conversation when there isn't enough or the data doesn't back up that price that that person's willing to pay. And that's the unfortunate part that sometimes comes of how quickly this market's moving and how little inventory we have.
Yeah. And what are some of the base criteria? Maybe Olen, you can speak to this. What are some of the base criteria that you analyze? And what are some of the new criteria that you're having to analyze to really, as Andy said, on the wheel, hit that perfect timing as far as market value goes?
Well, staying with the most current data is possible. But Andy alluded to it. You know, with the limited sales, there's a real scarcity of market data in certain areas of Whatcom County. And you know, appraising in Whatcom County, everything's unique. There's a lot of unique property, so it's non-homogeneous product, generally speaking. So finding comparables, it's tough. So what I'm doing is obviously looking for the best, most comparable data, locationally, physical, site characteristics. However, I'm also looking at pending sales and active listings and putting a lot of emphasis on those leading indicators in an attempt to keep up with the market, because that's our job. You know, as appraisers, it's a retrospective process, generally speaking. You know, you're looking at closed sales, so you're looking at stuff in the past. However, when you have this, you know, hyperbolic market that we're in, you know, we're, as appraisers, we're charged to look at the current market value and what is it currently doing. So, you know, looking at those pendings, looking at those actives, and looking at the inventory, looking at, the fact that there's 2 weeks of inventory. So those actives, are they relevant? Yes, they're relevant. When we got multiple offers, five written offers, written and confirmed offers by the agent, I will take that in consideration, and I'll say, look, here's 5 offers that are saying the value is X. I mean, how do you argue with it? You can't.
Yeah. And do you also take into account, so you're looking at the appreciation over last year being around 17%, seeing something around the same this year. Does that also play in a little leaping a little bit forward in your projections without being too overly optimistic?
No, I mean, that's just our internal forecast, our banner between ourselves here, what we're kind of thinking may occur. But it's, again, like Andy said, it's got to be rooted in data and backed up with facts in our reports, because that is what the lender's relying on to facilitate their collateral lending. So looking at, again, putting the emphasis on what that current market data is telling you. Yep. The number of offers, the active inventory, the pending inventory, and really expanding what you would normally look at as far as your search criteria because of the scarcity.
Yep. And Dylan, so we're looking at supply and demand, right? Very simply looking at supply and demand. And there's a lot of different factors that play into that, right? There's so many factors that we can analyze as to why our inventory is low. There's some big factors like COVID, other factors like interest rates. What impact have you seen, our incredibly low interest rates having on the buyer pool growing? What have you seen in that regard?
Yeah, so I think you're having a massive uptick in, buyer inquiries. I think, the problem that we're having, which you guys have all alluded to, is the supply. I think the demand is there on the buyer front. There's even demand on the seller front, but everyone's saying, where am I going to go if I sell my house, right? If we're just looking at, Whatcom County, I would say a very, very hot market is, a lot of these people want to sell their home and want to upgrade, because what's happened because of COVID that I'm finding with a lot of buyers is, for one, we're having a lot of influx into Whatcom County from California, some of these other areas, Colorado, I've seen a lot of, the East Coast. So a lot of people want to live here. It's a very desirable place to live. We're very lucky. The other piece is we're spending more time at home than we ever have before, right? So a lot of people are starting to realize, geez, I don't have an office at home. I don't have enough space. Oh, geez, I have another kid on the way. Hey, I got a quarantine puppy. I'm guilty of that right now, right? So now I need a fenced in yard, right? Everyone's looking to upgrade and get more space. So what we're actually seeing a lot of is those move up buyers. Also on my end, which the appraisers deal with, but realtors, you guys don't really get involved, is the refinances. With rates being, in the mid to high 2s, right? Low 3s. You're seeing basically everybody and their mothers that are in the, low 4s, 5s even are refinancing. And that's a whole nother bucket there where we're dealing with appraisals as well. And then you don't only have somebody that's purchasing a property and getting an appraisal on, you have somebody that owns something. It's their most valuable asset a lot of times, and they're getting an appraisal. And on the bank's end, when I'm loading the application, when I'm quoting them numbers and interest rates, I always ask them, what do you think your home's worth, right? A lot of people look at, I think I'm going to see some cringe, Zillow, Zestimates and Redfin estimates, right? And that's what people give me, right? And I say, well, this pricing is dependent on, this estimated value, because that goes into loan to value. And then reality strikes, right? People always think their home is worth more than it is. I don't, there's just some emotional component there, right? I, as a lender, always suggest that they reach out to the real estate agent and say, hey, can you pull some comps for me? Like kind properties in the last 3 to 6 months that are similar to my home, and, kind of give me a range, what I'm looking at. Because once again, Zestimates, Redfin estimates. They don't know the home. They don't know the functionality. They don't know, the flow. They don't know if it's right next to a freeway, right? I mean, it's really hard. That's just a computer system, right? If they reach out to Leo, hey, Leo sold me this house. He knows the bedrooms. He knows the bathrooms. He knows the improvements that I've made, right? Zestimate, and Redfin estimate doesn't know those improvements that were made. He knows where my home is located. He knows that there's a little peekaboo view here, right? So you have a better understanding of what that value may come in at. So typically I like to have that client reach out to the real estate agent just to pull some comps and get an idea of what that home is worth. But yeah, that's what we're seeing a lot of: massive refinance inquiries, massive move up buyer inquiries, or out of town buyers coming in.
Okay, yeah, thank you. And Olen and Andy, for you guys, I'm going to give you a scenario. You've got maybe an agent that's never dealt with a multiple offer situation, a newer agent, and there's a situation where you guys are in contact and they're saying, I've got 5 offers on the table and they're all way above asking price. I'm super excited. My clients are super excited. What advice do you give, even though knowing that the market is wild right now, what advice would you give to that person to make sure that they can be prepared for a smooth appraisal?
What was that last part? I'm sorry.
Yeah, no, just so the scenario is that you're just giving an agent advice that's in a situation where they have multiple offers. They're super excited because they have, they listed it at 400, it's at 475. Their clients are super excited, thinking they're making $75,000 extra. What's your advice to accepting an offer that's going to be a smooth, go through the smooth process of an appraisal?
I think that they should go with whatever they think's best for them, because a part of our job is to take that value and, either put our data to work and look at it and go, okay, this is what it's worth. Because Olen said it earlier, if you have 5 or 6 offers all around the same, that's data showing you, hey, this is what people are willing to pay this. This is what the market is. And I think it's our job to do the hard work. I mean, we're not necessarily always looking for those easy appraisals. They do come, but the reason why we have a job is that we're able to take these difficult situations that we're in right now and, back up the lenders and do our job. So it's interesting because, I mean, obviously don't take a, $1 million offer on a $500,000 house, but I mean, if it's within a reason, they should have any issues with us as an appraiser.
Yeah. Thank you. Yeah. Olen, what about you? What advice would you pass along?
Well, I would have that agent consult, a seasoned agent and run the scenario by them and say, hey, look, would you mind, or a mentor that they're working with, hey, can you take a look at these offers? Here's a cash offer, finance offer, just have them look at that, and give them some feedback as to what may be the best decision or advice to give their clients. And maybe rerun some comps. Take a look at rerun and analyze your comps that you ran before. Has anything changed?
Yeah. So you're saying that it's important not just to, you do your market analysis before you list the property and it goes on the market. It's important to continue to be analyzing the market. Even, granted, homes are not on the market for more than, let's say 5 to 7 days or even 10 days in Bellingham. So it's important to keep analyzing that, even at the point, let's say a couple of weeks down the road when you have an offer on the table, reanalyze that data. Is what you're saying.
You got it.
Awesome. Okay. Well, let's shift gears a little bit to appraisal waivers. So there is a factor of COVID, which obviously people interacting with people in person or being in other people's homes is definitely a challenge right now. And a lot of what you guys do is to do a qualitative analysis is to walk through the home. And Dylan, this is definitely in your arena, but both also in Andy and Olen's arena. When is an appraisal waiver when is it appropriate? When does it happen? I've seen a couple of them happen recently, and I'm always surprised to see it. I just am. When do you see that happen, and what are the criteria that are analyzed to give that the go?
Perfect. Yeah. So I preemptively pulled up Fannie Mae's guidelines because there is actually a somewhat of a science to it. You know, it's a little bit on market data. You know, basically Fannie and Freddie have been collecting big data on properties, but there is, you know, some minimum standards, I would say. These are not an exact science, but there are some criteria, and it will depend on, you know, if it's a rate and term refi, a cash out refi, or a purchase. So, you know, on, you know, rate and term refi, they'll basically, they can come up. I don't want to say it's a certainty, right? They can come up on primary residences and second homes up to 90% loan to value. So when you owe, you know, 90% of the value, investment properties up to 75% loan to value. On cash out refinances, you'll see them on primary homes up to 70% loan to value, and second homes and investment properties up to 60% loan to value. And then on purchase transactions, you'll see on primary residences and second homes up to 80% loan to value. And then that's basically like kind of their minimum standards. And so loan to value, you know, just to break it down, right? If the home's worth $100,000 and you owe $80,000, right? That's 80% loan to value, right? You owe 80% of the value. So on refinance transactions, right? That's why that estimated value is so important that I was alluding to earlier, is like, I asked the client, what do you think the home is worth? I do a little bit of research myself, right? Look online as well. And so I can play around with those numbers, right? So if I'm doing a rate and term refinance and I really want to try to get a PIW, is what we call it, a property inspection waiver, I'll kind of tinker with those numbers a little bit. I have found that, right, good credit, low debt to income ratio, right? Kind of the cookie cutter clients that are, you know, really, really vanilla. Those ones get the property inspection waivers more often than, you know, maybe a tougher file that has a high debt to income ratio. It's more risky, right? And then it also depends on the property. I've also noticed trends with, if a property hasn't been sold in 50 years, right? There's just not a lot of data on that property. If it's in an area where there's not a lot of homes around it, right? I've noticed some patterns there. So that's really where we're seeing, you know, there is that minimum standard for the loan to values, but I think it's a risk analysis altogether. And, you know, we basically need a full package loan. We run it through our AUS system, through our automated underwriting system. And it basically says property inspection waiver eligible or not eligible, right? But those are the minimum standards for the loan to values, or what I mentioned earlier. So yeah, hopefully that answers your question.
It does, yeah. And Andy and Olen, for you guys, when you first look at a property online that you have to go do a report for, if you're on the brink of, you know, this property inspection waiver, go ahead from the bank, I mean, do you look at the listing photos? If there's 0 listing photos, do you go, oh shoot, I actually have to go drive by and very likely go take a look inside the property? Or do those have any, like the way it's marketed and how well it's presented, does that have anything to do with that decision that you guys make?
So Leo, are you talking about inspection waivers? Or are you talking about, like, if we contract out an appraiser, right? What are they looking at before they go out to the property? Because if we get a PIW, a property inspection waiver, we're basically not contracting out an appraisal at all. And then maybe something else we should mention too is, you know, Fannie, Freddie, VA, FHA, USDA, I mean, all the different, you know, agencies have basically allowed, with COVID, drive-by appraisals.
Yep.
So, you know, this is kind of a new phenomenon as well, because usually it was full appraisal on every single home, right? You had to do an interior inspection, exterior. You know, Olen and Andy can probably, you know, go into more depth on that. But with COVID, you know, now as lenders, we're allowed to do drive-by, or we're allowed to contract out, I should say, drive-by appraisals in certain situations. It depends on, you know, if it's a cash out refinance, then we need an interior. If it's a rate and term, Fannie to Fannie, we can do a drive-by. Freddie to Freddie, we can do a drive-by. purchase transactions, we can do a drive-by as well. Although the caveat there is if it's a newly built home, right? Like I know you have that development out in Semiahmoo. If it's a newly built home, right, and you're selling one of those, we need a full inspection because we need to see that the construction has been done on the inside. So I just wanted to make that distinction before Andy and Olen jumped in there. So.
Yeah, it would be the situation where you've contracted an appraiser. So I'll let you, Andy, if you want to jump into that conversation about how it's presented online, if that makes any difference to you, how much detail you need to go as far as going inside the property.
Oh yeah, I mean, information's everything for us. So as much as I can get, that's what I want. I've done quite a few COVID exteriors. The problem I have with them is that, you know, we're not physically going into the property for the same reason that Dylan said about Zillow, Redfin, those estimates and everything like that. It's good for us to go into the property, see what see what kind of fixtures they have, what kind of what quality of fixtures that they have. And if we don't have those pictures online, if it's just a picture of the outside of the house or a spec design, or it doesn't give us all the information that we need to really do our job. And so it becomes very difficult when we don't have that information, and we have to go to greater lengths to assure that it's a certain type of quality. And you just never know until you go inside the house what is actually going on inside.
Yeah.
And that it just kind of creates an issue with giving a proper value to a house, because the person who lived in it could have done extensive remodel and put in top of the line everything, which does add value compared to an average type home. And we have to assume that it's just average if otherwise we don't know. So if there's no internal pictures, we have to assume that it has average fixtures for the market area or the neighborhood, and go from there. So it could hurt value, it could keep value pretty much the same, or it could increase value in very rare occasions because if the house is in very poor quality. But yeah, that's the tough part about the COVID exteriors, is that without physically going into the house, we don't know what the inside looks like. We can look from the outside, and you try to do your best to kind of like peek through, but not all the time can you do that.
So you're saying it would behoove the agent to, at least if they're not going to do professional photos, which we should be doing professional photos, they make a big difference, to at least have an extensive array of photos so you can at least see all of the parts of the house you need to see, right? So that's important from your perspective. And Olen, for you, what advice would you give an agent to be proactive with you? So if they're getting ready to list a house, what are some tips or tricks you would pass along to this listing agent to give you more information? Not necessarily that you're going to be the one to do it, but for the appraiser that's going to do it, to give you as much information as possible and be proactive.
Well, it's, the old time agents, that generally that they might bring some comps, they might bring a little package together, a little CMA that they worked up, a current CMA that they worked up, not one that they ran when they listed the property, and they'll say, hey, here's kind of what I was looking at. So for me, it's oftentimes relationship. Do I know this broker? Do I know that they're pretty spot on their value, or are they a newer agent? That kind of lends into some of the credibility of the data that's being provided. So, but it's always helpful. I mean, the appraiser's always going to run their own data, but it's nice to have something, to look at and say, hey, here was kind of the agent's methodology or their approach.
Yeah, absolutely. So if you don't know the agent, and not to say that would make a difference, but it might help if you're a newer agent and you're just starting out. to do that extra proactive work to at least show where you're coming from so you can build that relationship. Sounds
I,
like.
I would, I would. It's a small town. I mean, it's Whatcom County small, and you know, if you're going to stay, you're going to make this your career. You want to, you know, make friends and get to know who the appraisers are in the area, and you know, establish those relationships. And because you're not, you know, it's not just a one-off transaction. You know, typically, there's few appraisers out there versus relative to brokers, and so you're more likely going to see that appraiser, you know, multiple times in a year if you're doing several deals.
Right. So let's shift.
Hey, Leo,
directions. Go ahead, Dylan.
I have a quick comment on that. I'll give a non-appraiser opinion because, I mean, to your point, right? On the banking side, we're ordering more drive-by appraisals than full appraisals, right? Just from a sheer amount of volume, right? So if you're a listing broker or even a buyer's agent, right? Like, as you alluded to, it's going to behoove you to have interior photos. I mean, I've seen the Matterport, right, technology where it shows the flow of the house, right? You walk into the dining room, there's the kitchen, there is each bedroom. Like, I can imagine from an appraiser's perspective, you look at a listing like that, and then you look at a listing that has cell phone photos. I mean, we're all human, right? Appraisers are human. I'm human. The buyers are human, right? I mean, how do you value that property, you know, versus one with Matterport that has everything going through it? I'm sure there's other technology, right? The drone photos where you can see, you know, the area and what's around it. I mean, 100%, I would think that helps. And on the refinance side, I always tell my clients, like, do some market research. As I said earlier, reach out to your real estate agent, get some comps. And when that appraiser comes in, walk them around, right? Like, give them the data. Here's what I've done. Here's the improvements I've made. Here's the report that my agent just gave to me. You know, here are some comps in the area. Like, you know, it's all data for them, right? So pull the data, be proactive, right? Communicate with that appraiser. I mean, it's not going to hurt you, right? So to that point, that's what I've seen from the lender side and just, you know, personally as well. I mean, I've done refinances in the past. I've bought homes, right? Like, I think the more a listing agent can do on that marketing front, more likely than not, it's going to be a drive-by appraisal. So just from the guidelines, I mean, you know, unless it's a newly built home, more than likely, you know, it's going to be a drive-by appraisal. So I think that's the biggest nugget to take away from this.
Yeah, I agree with Dylan there. Just on any appraisal, having the realtor come in with information, improvements, that's the biggest thing. That's how we, you know, if the house sold within the last year, what's changed? What have they done that could make this house worth more? And it's always nice because, you know, sometimes they're not apparent. If you're replacing duct work, we're not going to see that. If you're replacing electrical work, we're not going to see that unless we see, you know, new outlets and we ask those questions. So things that help improve value, you should always be handing that information over as much as possible, because that's going to increase our ability to appraise this house correctly.
So from a proactivity standpoint, what you're saying is, like, Dylan, if you have a client reach out to you about a refinance, they may not have already talked to the realtor, but if you're watching this as a real estate agent, what they're saying is take that proactive step. If your client is saying, hey, I'm thinking about refinancing, what do you think I should do? You can actually just be proactive, right? And you can send them over a market report and say, hey, this is what was recommended to me by by one of our lenders or our lender, and take that proactive step to have them come to you with that information so they can be successful. Before we transition, Morgan Loy here, she just asked a question for all, and I'll let whoever wants to jump in on this question. Does the list price of a property have any bearing on appraisal value? For example, if the house gets bid up $100,000 over list price, does that raise a red flag to appraisers, or do you not take list price into account? And I can reread that if you'd like me to.
Yeah, I take it into account. If something's selling for, 50, 100 grand over, part of our verification process is talking to informed parties to the transaction. So either talking to the listing broker, the selling broker, the owner, something. What happened here to make this house sell for more than its list price? And if so, how many offers were there? Were they cash? Were they financed, or were they major significant cash down? What were the circumstances that drove that to sell or penned way over list price?
Yeah. And we've got another question that came in here. Kari Andrew Skinner, what happens if a full appraisal is ordered and the home's occupant gets a positive COVID test when that appraisal is supposed to take place? What's the, it's kind of a one-off scenario right now, but I'm sure it's common.
You go in with a gas mask.
Yeah. What is the protocol for that?
I think that we go back, if that happens and we're aware of it, we'll go back to the lender and talk to them, ask them how they would like to proceed. I'm personally not going to go into a home where there's a positive COVID test, but until it's resolved. So I think it kind of totally depends on what the lender wants to do at that point.
Yeah. Any other thoughts on that? Have you guys had scenarios like that where you've had to go back to the lender or reschedule the appraisal or anything along those lines?
Cool.
I had one in the early COVID days where it was actually a tenant. So it was a refinance of a triplex. And one of the tenants tested positive for COVID, or had told the appraiser that they did. And we had to wait 14 days. I mean, basically for the appraiser to feel comfortable to enter the home.
Yeah. Tough luck. You just have to wait it out. So at that point, it sounds like closing would get extended to accommodate that appraisal.
Yeah. And luckily this one was a refinance, but yes, I mean, I think, to an exception process, I don't think there really is an exact one, right? I mean, we're still kind of, this COVID thing is still, although it feels like it's been a long time, it's still relatively new, and we're kind of, going with the flow and eating the punches, and I think there may be some basis for exception. It depends, right? I mean, there's not a lot of times we're getting a full appraisal, right? I mean, if you heard that earlier part, I mean, the times we're getting a full appraisal is on a cash out refinance and then a newly built home.
Yep. Got another question here from Tim Cornwell. What are the responsibilities and requirements for the appraisal management company to locate an appraiser to conduct an appraisal? He said he has a rural property under contract and the lender is telling them that they can't find an appraiser to take the job.
Yeah.
Go ahead.
I had this problem in Idaho. So, I mean, once again, depends on the lender, depends on the AMC, depends on the area, right? I mean, I don't think I can vaguely comment on this and cover every single area and every single lender. But yeah, I mean, we basically have AMCs, appraisal management companies that we use that contract out the appraisers. They have certain appraisers on their panel, is what they call it, on an approved list. Some lenders have more than others. It's just, I don't know that exact approval process. For Andy and Olen probably actually know that better than I do, because that's through our AMC. But yeah, I mean, there's rural areas that I have trouble. I mean, we get an email every week on our average appraisal turn times in every single county that we lend in. So, if I get a purchase and sale, or if I'm writing pre-approvals in counties other than Whatcom County, which I'm the most familiar with, I'm going to look at that email. And, if the average appraisal turn time is 21 days, and right now in Whatcom County, we're sitting at like 7 to 10 business days. I mean, I know it's probably going to take twice as long. And we may have appraisal issues. I mean, I had one in Idaho, like I alluded to, that there were 7 appraisers in a 100-mile radius, and they all denied the order. I mean, they just denied it. They didn't want to take it on.
No go.
So,
yep.
Yeah, we had to flip to a different AMC. who ended up finding one that was able to drive in there. I want to say it was like an 80-mile drive. I mean, and it took almost 30 days to get an appraisal.
So, it depends
So
on the area, yeah.
yeah, that's a really great question and a really tough question to answer.
Yeah. Well, let's shift direction. I want to talk about the future a little bit, because remember, we have crystal balls. All of our clients, all of the people we know, they ask us about the market, and we have this. We're reading the trends. Ultimately, we're trend readers, right? We can't read the future, but we can read trends. Andy and Olen and Dylan, the market didn't crash in 2020. Everyone was just afraid that something terrible was going to happen, and ultimately it exploded, right? What do you guys see for 2021? It's a little bit closer in our sight, but what do you see for 2021, 2022, and beyond? What are some trends that you're reading in your industry?
Who do you want to start?
Andy, why don't you start, and then Olen, if you want to follow up.
Sure.
It's hard to say. I don't see any changes. Olen kind of talked about this earlier. I just don't see any changes happening. Because of the influx of people, because of the shortage of supply, because of the increased demand, which may even become more just because people are going back to work or getting as this hopefully COVID goes through and jobs come back and everything. I just think that it's just going to create more demand, and it kind of just depends on our supply at that time. If people are willing to, every house I go into now for refinance, we talk about that. They go, well, where am I going to go if I sell my place? It's worth so much, but I don't have another place to go. So I don't see it changing currently, but there's a lot of things that could go on that could change it very quickly. But so far, personally and within Gustafson, we're kind of treating it as it's continuing. It's just as the market is.
Yeah. Olen, yeah. What about you? What are you seeing as far as trends going, and localized, more importantly?
Well, localized, barring any kind of national or global black swan event, I think we're still going to see continued growth. We've got demographics, we've got income, we've got population. They're all coming into our area. Whatcom County, Bellingham specifically, they're not opening up any more land. There's no major new subdivisions coming online. There's other than a few builders in town, skiers and black, there's just nothing on the horizon. So we've got this massive influx of people coming in. I think that trend is going to continue throughout this year. As this COVID situation lingers and people finally get vaccinated by the fall of 2021, maybe. But yeah, people have been looking at our area for the last couple decades as a phenomenal place to live and retire. And now, you've got all these baby boomers, that were on the fence about moving. The COVID hit. They said, screw it. I'm taking early retirement. We're moving. We're taking our tech job. We can live anywhere. They're coming, and they're coming in mass.
Yep.
So I don't see that trend changing whatsoever. So that's why I'm kind of comfortable with the appreciation rate for Bellingham, somewhere between 15 and 20% for this coming year. And so, do I think it's a phenomenal time to buy? Yeah, realize the appreciation, capture these interest rates while you can. The macro, the economists are predicting higher interest rates come 2022. Will that materialize? Who knows?
Yep. Yeah. And interesting, you just mentioned something specifically about Bellingham. So from your perspectives, how does this influx of people to Bellingham affect areas like Ferndale, Linden, Blaine, even Maple Falls and Mount Vernon, places like that? What are you seeing as trends for people going, oh, we're moving to Bellingham. We're going to buy something for 450. And everyone says, all right, good luck. Yeah, good luck with that. And then they say, well, what else is out there? And you say, well, there's Ferndale and there's Blaine. What are you guys seeing as far as growth in those other areas as kind of a rebound from that, direction towards Bellingham?
Well, definitely the suburban townships they're capturing all of that excess flow of people that are coming in. There's for crying out loud, there's a new subdivision going in Kendall up in in Paradise. I mean, that should tell you something. That and they're selling. So that hasn't been developed out there in 25 years. So I mean, there's demand, and it's just pushing out everywhere throughout Whatcom and Skagit counties. And I was up in concrete this summer, and there's a building boom going on in concrete, of all places. So I mean, it's putting pressure everywhere.
Very rural living. Yeah, right on the description. Let's shift a little bit to interest rates. Dylan, let's talk a little bit about what are some economic indicators as an agent or as someone that's not specifically wrapped up in your world. What are some trends for people to watch out for that might indicate a increase in rates or decrease in rates? What should we be looking for?
Yeah, I thought you were going to ask me, what rates are and what I think they'll be, trying to get me fired,
I'm going to repeat myself.
No, but yeah, my crystal ball is really just listening to the experts, right? Economists. There's also a lot smarter people at this company that deal with pricing, for us, and are watching a lot of these economical shifts. And, as Olen pointed out, the experts, we'll call them, were predicting, they were actually predicting low rates for the next 2 years. Not to get political, but that's, that filters into my job. The Senate flipped. And, once that happened, a lot of those same experts now have flipped their tone that they're saying that we may only see these low rates for, the first half of the year. And that's, a lot of the higher ups at my company that deal with pricing and stuff are kind of singing that same tune. We're seeing rates in the 2s on 30-year fixed mortgages, right? So by them going up, I don't think we're going to see 5%, but, I could maybe see a shift, by the end of this year, early 2022, back to those low to mid 3s maybe, which, obviously that will impact affordability. Right now, and when you're talking about trends, right? Watch politics, watch the stock market. What I most closely watch is the 10-year treasury. That's what interest rates, mortgage interest rates most closely follow. And the 10-year treasury just hit 1% for the first time since February of this year, or sorry, last year. I forget, we're in 2021 now. So that 10-year treasury is slowly ticking up. So I think we're already starting to see that shift a little bit. As the manager here at Umpqua, we're in sales too. I'm telling, my coworkers, like, hey, you got to pick up those last few refis that are around there, because, if these rates start trickling up to the mid 3s, a lot of those, suddenly don't make sense. And then in the purchase market, the difference between, 2.75 and a 3.5%, if you have a lot of these move up buyers that are, really cost sensitive and sensitive to that monthly payment, and you're looking at debt to income ratios, it could suddenly flip the script on how quickly, these homes are selling if affordability changes. So I think it's something to be cognizant of, anyone on this call, just, keep an eye on it, have your lender send you, some updates every month or every week on, what rates are at, just kind of keep your thumb on the pulse, watch the 10-year treasury if you really want to get granular, watch the stock market. You can follow, a lot of different news channels, and they'll talk about mortgage interest rates and the average, and Freddie Mac posted, a good graph and stuff of the average. And so I think there's a lot of tools that you guys, as realtors should use, just so you're equipped. And if you're out there with a buyer and they ask you guys, you want to know what you're talking about. So that's my crystal ball. I've been wrong before, so we'll see. I hope they stay low. It's great for us.
Great for everybody here. Yeah. So I've got two more audience questions. So I'll fire away. A couple of them are relevant for everybody, and one is relevant for probably more likely for Dylan. So from Angie Dixon, what is optimal mutual to close time frame right now in our county? If you're quoting an agent that's working with a buyer, what is that? What are you saying?
This is for me.
Yeah.
Yeah. It depends on the file. It depends on the client. I mean, if you got cookie cutter, clean credit, W-2 salary, down payments in a checking account, homes in Bellingham, appraisal is going to be pretty quick. We could rush it. I mean, we could get that done in 2.5, 3 weeks. I mean, if it's more complicated, they own 16 businesses and 24 properties, and they're buying a $2 million house, and it's a jumbo loan, correspondent, right? I mean, all these things kind of trickle into the turn times. Then maybe we're looking at 4 weeks, 4 to 5 weeks. General rule of thumb, if I just had to quote without even knowing a client or the situation, I would say 30 to 35 days on a purchase, which of course, when we say 30 to 35 days, that's, you're looking at that's calendar days. If you think about our back end staff, our underwriters, our CD drawers, everyone that's not in sales like me, they're working Monday to Friday, right? That's business days, which makes, during the holiday season, that makes those 30-day purchase and sales, makes it really tough. So I would just say, talk to your lender or talk to the lender that your buyer is pre-approved with. And I think that's the best way to get the most accurate gauge on, what the turn time should be.
Yep. Thank you. And our last question here is again from Morgan Loy, and this is for Andy and Olen. So is a residential appraisal pricing based primarily on home size brackets, or how does that fluctuate, or does it fluctuate?
No, it's not based on home price brackets. For me, it's property specific. Is it waterfront? Is it complex? Is it acreage? If obviously you start getting into 4 to 10,000 square foot homes, then size is a factor in quoting pricing for a job. But typically, a residential appraisal in town, no, there's no pricing brackets. Say under $1 million, the fee is X. No.
Yeah. Did you agree with that, Andy?
Yeah, I mean, most of them are standard, and then it just depends on the complexity of the property. I could see that one, that Dylan had in Idaho, or those ones that nobody really wants to take. Sometimes they just kind of take the right price point for somebody to take on a big old headache. And that's kind of what it comes down to. It's the complexity of it. How much time are we going to be spending on this? How much research that we have to go into it? So, but a lot of it's just kind of base pay for certain lenders and certain AMCs.
Yep.
Yeah, and I think just to chime in from like the lender side, it's the process for us is, right, we have a base fee, right, for the cookie cutter stuff. And then as Olen and Andy both said, if there's complexities, right, waterfront, acreage, large home, outbuildings, it's basically an extra $200 fee. And then if you want to rush the appraisal, it's an extra $100 fee. That will depend by lender. If you're not using a lender and you're just going straight to the appraiser, then I believe you guys as appraisers just quote it out, right, based on some of those similar features. So,
yep. We actually had one final question from Olivia Statham here. I'm going to just fire it off, and then we'll wrap this up. So Olivia said, is appraisal cost less for a refi than a purchase in general?
No. No.
The shortest answer of the day. I love it.
Yeah. No, it's the same base fee, same complexities. It's the same process, right, for the appraiser.
Yep.
So yeah. Good question though.
That is a good question. Do you guys have any final words before we wrap up?
Just have a safe and healthy 2021, you guys. Be cognizant of your surroundings.
And we're all working together. I think a big reminder for this group that's watching and for those of us on this call, we're all in the same industry. We're all working together. And this call is meant to illuminate some of these mysteries that we may have. And so we're all working together. Just remember that. We're all in the same boat. So let's keep things moving forward. Be proactive with the appraisal. Do a good job comping. Get a second opinion, right? If you're unsure about pricing, let your ego go and just ask someone for help. I do it all the time. So, gents, thanks for joining us today on the Q1 panel. I hope you guys have a good rest of your week, a great weekend, and thanks for joining.
Yeah, thanks for having us, Leo. Appreciate it.
Thank you very much.
Thank you.